Welcome to this demonstration of Financial Mappers Pro. This is the perfect tool for you to quickly create detailed plans for your clients and see the calculated outcomes of those plans. It's so nimble you can quickly change the plan while your client is with you in a meeting and, in a matter of seconds, show them the results. Financial Mappers Pro is customizable for your business branding and reporting requirements. For this demonstration, we're using a fictitious company called Good Advice. Good Advice has purple brand colours and has these set up on their Financial Mappers Pro installation. Good Advice advisor Simon Simmons has new clients, Bob and Jan Potts, and adds them to his client list. From the information he has been given in the fact find, he enters Bob and Jan's current financial position into the starting position area. Please let our team know if you have a requirement to import this starting information for many clients at once from other software by using an automated data upload. The last section of the starting position, the monthly investment allocation from salary, is very important. The allocation of a portion of the salary for annual investing is later adjusted while creating the plan as a percentage of salary. Any new plan created using this starting position has funds already nominated for annual investing because the percentage of salary required has been calculated here. This salary allocation to investing percentage is based on two main things. Firstly, the cost of the client's home and investment loan obligations, and then secondly, how much they want to allocate each year for investing. This investing includes making additional loan repayments, purchasing other investments, or making personal contributions to their retirement accounts. At the completion of entering this information, a report can be generated which shows the financial position at the start of a plan. Now our advisor creates a plan for Bob and Jan using this starting position information. When you open a new plan and begin working in the plan management area, there are a number of navigation chevrons you can use to move between the plan and model pages. Our advisor clicks on the Objectives chevron. Then on this page he enters the client's objectives for the current plan and the main strategies that will be used to achieve these objectives. Later, any relevant comments can be added. This information about objectives can then be included in the Good Advice company's customized reports, such as the Financial Objectives and Lifestyle Goals report, and also, of course, the Statement of Advice. If your client has provided their financial investment targets, these can also be entered. As the plan is developed, you can check back here to see whether their targets are achievable. Very useful when demonstrating to your client to ensure their expectations are realistic. Now we come to the Planner page, where the plan is created. All the information from the starting position is pre-filled into this plan. Financial Mappers calculations use a set of default rates, so any rates in the plan will be preset to those rates. When you customize your own Financial Mappers Pro software, this includes setting up the values of your own default rates to be used for forecasting calculations. Building a plan includes these main steps. Number 1. Adding the finer details to the starting position elements. Number 2. Entering any purchases or sales of assets that utilize investable funds assigned to the transaction account. Number 3. Allocating the investable funds each year to chosen assets in the salary allocation to investing area. Number 4. Monitoring the transaction account balances each year of the plan, as this is the cash flow hub for investing activity. Number 5. Checking the calculated model via the review area, any reports in the reports area, and the results in the targets area. Here's an example of first adding some additional information for Bob and Jan that wasn't collected in the starting position before getting on with the future planning. Let's look at the share portfolio for Bob and Jan. Our advisor can change whether the dividends are reinvested or transferred to the transaction account, and the percentage of imputation credits can be included. And here, in the investment property account, our advisor can add information about the building write-off and the depreciation schedule. Now for the entry of specific future asset purchases or sales. Number 1. Bob and Jan have requested advice about which managed fund Jan should invest in. So our advisor creates a new managed fund account for this purpose, and later he can decide on exactly which fund and how much of the salary allocation should be allocated to this fund. Number 2. Also, Bob and Jan have said they want to sell their home in year 5 and buy a new one. This information can now be entered into their new plan. In this example, the home will be sold at the end of year 5 and the new home will be purchased at the start of year 6. With regard to calculation of the various types of asset transactions, assets are deemed to be sold at the end of a year and purchased at the start of a year. Sale and purchase transactions show in those relevant sections of the transaction account's data view. Now we consider the regular ongoing investment of funds allocated from the salary. In the salary allocation to investment plan area, you can see the dollar amount of the percentage of salary allocation to investing and the net loan expenses for the home and investment properties. Our advisor decides that the investable funds are going to be assigned for each of the 5-year periods as 10% to the cash account, 20% to shares, and 40% to the new managed fund account. The remaining amount will be moved to the transaction account to fund the tax on investments and increase the percentage of cash-type assets held as Bob and Jan move closer to retirement. Bob and Jan have given some detailed instructions about a future renovation of the investment property, and our advisor is going to ask his paraplanner to complete this information. Our advisor clicks on the Manage Sharing button and selects the paraplanner Wendy Carr. He sends a message about what he wants completed. After receiving the notification email, Wendy logs into her Financial Mappers Pro account and goes to the Plan Shared with Me section and finds the POTS plan. Wendy then adds the information about the property renovation. The clients have indicated that the building will require a renovation that costs $20,000 in year 10. They plan to refinance the loan and add this $20,000 to pay for the renovation. The refinance loan is entered into the property loan area by using the principal, an interest loan with options. This additional loan amount for the renovation shows in the transaction account as a deposit, and the cost of the renovation is shown in the transaction account as a withdrawal. The transaction account is a cash flow hub of specific asset purchase and sale activities, and needs to be regularly monitored to ensure that it stays in the black. Wendy includes the base cost for calculation of additional building write-offs. She believes that another $10,000 is likely for capital purchases such as carpets and curtains. By the end of the saving/investment phase of this lifetime plan, the property loan will be repaid. Bob and Jan plan to sell the property in year 21 of the plan to provide funds for their retirement, so this sale is entered for that point in time. Our advisor has also asked Wendy to create a retirement income funding plan. Wendy's going to recommend the drawdown of amounts for each account in retirement. For this example, let's look at Bob's Super. There are a number of alternative ways of allocating the drawdown, but for this example, let's leave the drawdown to be allocated over 25 years. The same has been done for Jan's Super, shares and managed funds. The emergency cash account is going to be left untouched. The clients have indicated they want a retirement income of $150,000. However, Wendy believes they can maintain the same income as in their working life of $200,000 for the first 10 years and reduce the amount to $180,000 for the last 5 years. Note how the allocation of sources of retirement income is divided into retirement accounts, investment income, and investment capital. The accounts from which the funds are withdrawn are also displayed. In the next meeting with Bob and Jan, the advisor can demonstrate this retirement funding plan. Together, they can discuss whether they want to raise their retirement income expectations or leave the retirement income at $150,000 in order to leave a greater inheritance. We have now returned to the advisor's account. The advisor wants to suggest the client starts saving for their next car. This requires entry into the Lifestyle Goals section of the Planner page. Our advisor adds the lifestyle goal of saving for that car over the next 5 years, which is the first 5 years of the plan. Our advisor is going to recommend some income protection and trauma insurance for Bob. He adds his recommendations to the plan. At their meeting, he will ask Jan if she should consider some insurance cover and will make any immediate adjustment to the plan at that point in time. Our advisor believes that the client's base living expenses are $50,000 and also includes $10,000 of optional expenses. For now, he's just going to include one value for each. Clients' budgets can be entered to whatever level of details the advisor and their client desire. Now, the advisor wants to have a quick look at how well the plan is reaching the financial targets. He clicks on the Targets chevron. This information can be included in customized reports in both graph and table format. The Review page gives a very good review on a yearly basis of plan for the 8 essential parts of a plan. This page is the hub from where you can have detailed discussions with your client. Also, for each dial, click on the information icon and display the associated graph. You can discuss each section of the plan in a systematic way and why each element is in their best interests. Using this process, you can build the trust and transparency clients are searching for. Click on the Reports chevron to find 16 pre-programmed reports. In addition, you can make reports specifically for use by your advisors or ProConnect clients. The Plan Outcome Report is the place for you to review this plan in great detail, in either future or present value, and in graph or data view. Everything you need is at your fingertips. Look at the graph for the investment profile. This profile is based on the percentage of cash and other interest-earning securities. The investment profile for investments, excluding retirement accounts, is showing an aggressive profile in the early stages of the retirement phase. Our advisor may want to show this to Bob and Jan during their meeting and suggest that by selling the property at the end of year 15, the account could be reported instead as high growth. Our advisor could demonstrate to Bob and Jan that some of the property sale proceeds could be allocated to a property trust and the balance to a high interest earning corporate bond trust. The SOA entry is for advisors who want to create their statement of advice here in Financial Mappers Pro. When the plan is completed, entries must be made in the SOA area so that this information can be included in the statement of advice when producing it with Financial Mappers. There are 5 blank panels where advisors can write additional information related to the current plan for their client that needs to be included in their final statement of advice. Any of these SOA sections that are not blank will be included in an SOA report when the SOA is built to include them. Each section on the SOA screen is for inclusion in a statement of advice if details are entered, such as executive summary, general information about the client and partner, etc. Financial Mappers Pro has a unique report builder where each company can create their own reports. It is here that each business using Financial Mappers Pro creates their own SOA report format. Reports are created by including text panels that include information common to all SOAs generated for the business. These text panels can be interspersed with what we call smart panels. Smart panels are graphs and table of information imported from the plan. In addition, there is a panel which is an authority to proceed sign-in page. This will allow you to create your statement of advice within the software. So here's an example of the SOA our advisor creates for Bob and Jan after finalising the plan. Financial Mappers allows each advisor to create plans for an unlimited number of clients for an annual site license fee, plus a per advisor usage fee billed monthly. Financial Mappers also has a unique feature of allowing an advisor's client to have their own Financial Mappers account. Clients with their own Financial Mappers accounts are called ProConnect clients. To do this, the client has to be upgraded to a ProConnect account by the advisor, for which there is a small fee. You may recoup this cost from your client if you wish, as they will now have access to their own account within your company's branded version of the software. They too can add to any plan, including entering a detailed budget for you to review. The client can then share back that information to you through the plan sharing feature. Here's what happens. The Manage Sharing button is clicked. To make Bob a ProConnect client, his email address is entered, and the invitation for Bob to register his own ProConnect account is sent. Note that the advisor does not have access to Bob's Financial Mappers account, but Bob can choose to share plans back to his advisor. Bob has received his email and is now logging into his account. There are a number of sample plans Bob can use to get familiar with the software. Remember, this software is designed for ease of use, and any tech-savvy client should have no problems. Bob goes to Plans Shared with Me and finds the advisor's plan. He has to make a copy of this plan so that the advisor's plan remains as is. Once a copy of the plan is made, Bob can rename the plan and make any changes to the plan. He can also generate some of the short reports to help increase his knowledge of the financial planning process. After some changes are made, Bob can share his amended plan with his planner. Together they can collaborate on building a great financial future for Bob and Jan's senior years.
Financial Mappers Pro has been created and is owned by Plencore Wealth Limited, which is a public company. These are our team members and their roles. The best way to understand what Financial Mappers Pro can add to your business is to trial it. Get your free 30-day trial today. Fill in the form beneath this video or contact me by phone or email.